Welcome back. 17 points on the Nifty, lower 10,475 is where we are at, a 0.25% lower on the mid-cap index, and it's looking, weak. Advanced decline still is a little positive. Maybe it'll also turn back into the red, but from the day's high, and the day high basically was when we started, the market's off a long way. Let's get in Girish Pai of Nirmal Institutional Equities. He's with us here in our studios to talk about what he's making of things. Girish, thanks very much. Good morning.
Morning.
What is the near-term dominating driver for the market, for stock markets now, from here?
Near-term would obviously be, I think, global cues. I think there is definitely concern about the pace at which you will see monetary tightening in the U.S. So 10-year yields in the U.S. are going to be a very big determinant of how the markets are going to move. So that's, I would think, a global factor. The near-term, local factor could potentially be earnings, and also how political scenario is going to kind of pan out. I think earnings last quarter haven't been as good as what one anticipated when the quarter started, largely because of SBI and some of the oil PSU companies. And with the new dispensation on stressed asset recognition that RBI has kind of talked about, my sense is the 20-25% kind of earnings growth that Street is anticipating for FY19 will have to be pared back. So yes, I mean, we will see double-digit growth in earnings at the index level for the first time in FY19, but it may not be as good as what the Street is anticipating as things stand with the kind of norms that have been kind of put in. Because the norms actually came out only on the 12th of February, once the whole of the earnings season has kind of gotten over.
But we already had, for example, SBI was on air, and Mr. Kumar openly said that Q4 will be pretty bad because of that. I mean,
yeah, Q4 could be bad, and probably even some of the quarters in FY19 would look bad. So because I think the recognition of the stressed assets will have to be done a little early, and the provisioning number could be probably higher than what the Street is currently factoring into the estimates that they've kind of put out, which is available on Bloomberg and some of the other data sources. So I think these are the things. I think obviously the political factor from the Karnataka elections coming up in May, how BJP is going to kind of, whether it's going to win or what kind of a lead it's going to get. Those are things that one needs to kind of also watch out for. Macros have been actually worsening, while micro, the earnings picture is looking a little better than what it used to be like 3-4 years back. Macros, inflation, interest rates, even fiscal deficit. GDP is looking up. We are expecting next year to be pretty strong. 6.7 going to about 7.7 is what my economist is anticipating in terms of real GDP growth. But the other factors are kind of turning down, I mean, turning worse. You look at inflation, you look at fiscal deficit, you look at current account deficit, interest rates are kind of moving up. So the macros are kind of worsening, in earnings are looking up, flows could be a bit of a problem.
But the auto sales were strong, Girish, this time round.
Yeah.
I mean, isn't that high frequency data which points to something positive?
Yeah, it's just, I do not disagree with you. We do think that auto sales will remain fairly robust going into FY19 too. So I think if you look at this month numbers specifically, I think that has to do with the very low base for last year because of demon. But despite that, I mean, the numbers have actually been in line or better than what my analysts were anticipating. So, numbers have been good. We do anticipate that, things will look fairly robust going into next year too. So for two-wheeler sales, we're still expecting high single-digit to 10% kind of growth. Even for Maruti, we're expecting something similar to come through on the car side. So that's kind of a known kind of situation. I don't think things are going to change very dramatically there.
Sure. The other sector that I just wanted to touch upon is what's happening with IT, because that seems to be taking on a leadership role, at least up till now. TechM, Infosys, and the likes. Are we seeing more?
Yeah, so I personally track the IT services sector at Nirmal Bang, and so we had been negative on the sector for almost like 3 years until we kind of put the sector under review in December of 2017, because we're seeing certain signs that things are kind of changing. We have not put out a fresh view, but having said that, I would just like to say what kind of things are going into my, what kind of factors or what kind of variables are going into my thinking. There looks like there could be a bit of a small spike in growth going into FY19. Maybe not as much as what the Street is anticipating. The question to ask is that a sustainable spike going into 20 and beyond? which is what I think the current thought process is vis-a-vis the sector, especially on the mid-cap IT side, where people think that growth of 15% or 12 to 15% CAGR is probably given for some of these mid-cap companies over the next 2 to 3 year time frame. I doubt that. So we're here to put out our official view, but I think the valuations now kind of capture some of the positivity with regard to the small, modest pickup that one will see in growth in FY19.
Problem though is even before you start to make up your mind about something, prices are already up 30-40%, right?
Absolutely. So I think partly, I think the run-up in IT stocks, especially the mid-cap and even the large cap, has been largely because the street has been fairly underweight. And I'm talking the institutional investor base. You look at both the FIIs as well as domestic institutional investors have been fairly underweight the sector. So that's a positioning issue, and the fact that the other part of the market, the financial side of the market, which has been the big overweight for the institutional investors, has been facing headwinds because of higher interest rates, asset quality issues kind of popping up every quarter. We keep talking about the worst being behind us, but that worst being behind us commentary kind of keeps getting pushed forward in one sense. So that kind of results in a situation where kind of money has flowed into some of these sectors which have not done well from a growth perspective, but from a valuation standpoint look a little better. So I think that's what the strong flow of money, the relative undervaluation is what's led to the reasonable.
Till last year, the general sentiment was if it's worth doing, it's worth overdoing. That is not true anymore, right? I mean, so if stocks have already run up, you start to question whether it's already time to sell, even with sectors like IT, which were not really out there on anyone's horizon.
So I still think that IT will not, IT may probably modestly deliver better growth in FY19, but if you take a structural view, this is not a sector which is going to deliver you earnings growth in the mid-teens. This is going to be a sector
in that sense, the stocks have already...
I think it's broadly priced in. The question is, are things going to get worse on the financial side? So will money move away from financials? So it has to go somewhere. So it's a question of where will it go, and vis-a-vis pharma, maybe near term, the volatility on the earnings front is probably a little lesser in IT. Though we would prefer pharma from a longer term perspective, maybe 2 to 3 year perspective. We think the earnings rebound in pharma is going to be probably much more stronger than for IT. So we prefer that sector over IT. IT, as I said, the official view is still yet to be put out.
Okay, all right, Girish, we're going to leave it on that note. Thanks very much for joining in, and have a good weekend as well. We'll take a break now. But up next, Fortis continues to be in focus after the auditors have not concluded on the quarterly numbers. Mr. S.P. Tulsian is going to join in with his views on the same.
बरसों से सोचा था पूरा तो हो